Pisani. Hey, Bob.
Hello, guys. We are essentially at new highs, and I know it seems quiet out there, but actually there's a lot going on, a lot of percolation and rotation going on beneath the surface. Just take a look at the sectors right now. Banks have had a very good week overall. They're the market leaders, trending up really since the jobs report as interest rates have trended up. Materials are having a good week overall. There is some legs in that infrastructure trade, even though most of it happened earlier in the year. Industrial is also doing well. Tech has been lagging because interest rates are a little higher. I'll show you that in a minute. Right now, everybody's talking about just two things. One is the variant and the impacts, and the other is interest rates. So right now, the market is still acting like we are going to go towards peak variant, as people like to call it, in the next several weeks. Who knows if that's the case, but the market's acting like that. As for interest rates, they're trending higher here, and as a result, some things are changing. We're continue to see strong momentum in home improvement, in banks, industrials, in materials, and some downward momentum in the consumer staples names. I would say tech is stable to slightly to the downside. Let me just show you what I mean, put some flesh on the bones here. Consumer stocks here, big momentum in Costco and Sherwin-Williams still, and Nike, Walmart, one of the few consumer staples names that's really been doing well, but that's the exception in the consumer staples group. Financials are doing well because interest rates are rising. We're seeing some funds doing well, actually. T. Rowe Price has been doing great recently. That's one of the leaders in low-cost, no-load funds doing well. Nasdaq has been doing really well recently. And, of course, you mentioned the banks, Morgan Stanley, Wells Fargo, Goldman Sachs, also having a nice quarter. This is on the quarter so far. The big industrial and material names, Nucor and Dover, Textron, and Deere, they've been having a great time. And who knew there was legs left in that infrastructure trade? Surprisingly, Martin Marietta and Vulcan have moved up in the last couple of weeks. A lot of people thought that play was exhausted, but there's still some legs left in that infrastructure play. What we're seeing downward momentum in the last couple of weeks is in consumer names. So the liquor companies are not doing too great. Constellation, Brown-Forman, Kraft Heinz, Clorox, Campbell Soup, all looking considerably softer. Perhaps no surprise there as the economy tends to reopen. These stocks, this makes some sense as a play, have been waning for quite some time. The big debate is around tech. Tech is sensitive to higher interest rates. So it's been either side, and I'm talking the last several weeks to see how this plays out since really the jobs report came out. So PayPal, Intel, NVIDIA, Broadcom, Microsoft, the super mega caps have been a bit stronger, Microsoft and Apple, for example, but either side, a positive or negative. Let's say that debate is not yet over again. I think the key here, Carl, is higher rates have basically helped the market look through the whole Delta variant story, and that's been a major story. On the Delta variant, still slowing, not derailing the recovery. And the key question is, what exactly do you mean by slowing? You can change behavior without going through lockdowns, and that's what we're debating right now. How much are we changing behavior? Carl, back.